Show 2011. I guess they call this a spring home and garden show. Wow, it doesn't feel like spring out there right now. We appreciate you taking your time, about 30-35 minutes here, to learn about the Austin real estate market, where it's been, where it's going. We're going to talk a little bit more about mortgages and see what's been going on with that. I think you'll enjoy it. It's going to be a lot of fun. I do have some giveaways here. I have some books and some valuable resources I'm going to give away. And I also have gift certificates that all of a sudden disappeared. So I will be giving away $100 worth of gift certificates. The only thing is I'm going to have you guys whoever wins it will have to sign up, and I'll go ahead and send it to you. So it'll be guaranteed to get that to you. So anyways, once again, my name is Kenn Renner, real estate expert with Keller Williams Lake Travis Market Center. I've been in the real estate business for 27 years. Bought my first home when I was 19 years old in Anchorage, Alaska in 1983. This is balmy weather. This is short sleeve weather for Anchorage, Alaska. Glad we're here in Austin, especially when it comes to the real estate market. We are glad we are here in Austin. We're going to cover that. We're also going to have our guest speaker, Kenton Brown from Sente Mortgage, Vice President of Sente Mortgage, coming up and talk a little bit about the mortgage market, interest rates, and where that's headed, or where we don't know where they're headed. All right, well, we'll just go ahead and get started. First of all, I've been in the business for 27 years and closed over $225 million in real estate, $100 million of that in the last 5 years. So I'm pretty much considered an expert. Just wrote a nationally released book called First Time Home Buying Secrets Revealed, and I'll be teaching seminars and webinars on that. So that you can dial into buyaustin.com. That's my website, buyaustin.com. It'll give you the dates and times, and they're all free. I'll also be teaching the investment seminar that Jenny was asking about, which is the Millionaire Real Estate Investor, webinars and seminars. This is absolutely the best time to be looking at investing in real estate. Why? Because nobody's doing it, right? Nobody bought stock when it was at 6,600, was it? Everybody waited till it's got high, it dropped from 14,000 to 6. Same with real estate. Seems like nobody's buying when it's the best opportunity. What did that commercial say? That stock commercial say? Buy low, right? So we're going to be talking about this, some of the great opportunities in real estate, why it's a great time to buy. All right. So we're going to get into the bulk of, what happened over the last 4 years in real estate. Nationally, home prices doubled from the year 2000 to 2006. So we're going to take a macro view, and then we're going to come down to a micro view. And so nationally, it was from 2000 to 2006, doubled in value. Okay, so if you had a $250,000 house in 2000, nationally speaking, you would have had a $500,000 house in 2006. But since then, nationwide, the values have dropped 30%. And I always give people a hard time when they see in certain parts of California where the homes went up 300% and they dropped 30%. It's like, wow, So anyways, but now the drops are very dramatic in other areas of the nation. We have micro markets and macro markets. Down 53% in Las Vegas. Down 39% in Miami, where there are more than 25% of the homes in Miami are in foreclosure. But God bless Texas, huh? That song that God bless Texas. No major drop in values here. We missed the run-up, therefore we missed the crash. We were also limited by the state legislature not allowing us to borrow more than 80% of the value out of our houses. That's one of the key factors, because in the other parts of the nation, people could continue to borrow out of equity out of their houses. They weren't able to do that here. You could only go to 80%. And what drives housing is jobs. And we have the #1 job growth in the nation, reported by CBS News on national TV not more than a few days ago. We have the #1 best job growth in the nation. We're also counter cycles to the coasts. In other words, when the coasts are busting, the central part of south and central part of the nation is usually booming. And that's been going on for 30 years. We're not immune, so keep Austin blessed. Okay, we keep Austin weird, but I like to say keep Austin blessed, because you know what? If you are anywhere else in the nation, you wish you were here when it comes to real estate. It's not immune. We've all felt it. I'm going to show you the housing starts went from 15,000 down to less than 6,000 from 2006 to now. But we're still rated the best of, and I said fill in the blank here. because from Forbes to National Geographic to Money Magazine, you can check out any of the best ofs, and we're usually in the top 3, if not top 10, but if not the top 3, if not number 1. And our big claim to fame is number 1 in job growth. All right. The news is out because, so look at all the license plates around the nation. I mean, around town. If you've been driving around, you know. So where are they from usually? Florida, Arizona, California. You know. So the good news is that people are moving here, and that helps all of us. I moved here in 1993 from California for the same reason as people are moving here now, because it was a great economy and a place to have a good job. Okay, so get a job, and that's what's gotten around the nation is that Austin has jobs. And we added 17,000 jobs in 2010. In 2011, the economists say that we could actually add another 20,000 new jobs, estimated between 15 and 20. U.S. unemployment is 9.7%. Austin unemployment is 6.7%. We're the lowest in the nation. We are, once again, rated number 1 in job growth of the top 50 metropolitan areas. All right, here's an interesting graph. Annual employment growth. We're still leading the way out of the crash of jobs and the recession of 08 and 09, and we're pulling right out of that, and Texas is leading the way. All right, so what happens when, this is simple economics, what happens when people come here to take jobs? Well, they usually find an apartment or a rent house, but apartment, and because they're not sure where they want to live, so they're going to rent apartments, take the new job. When they get settled in, they'll go find a rent house or go buy a house. And so we're seeing that right now, that the occupancy in apartments is up 4% from last year to 94%. And the other thing is that this is going to continue because it's a landlord's market. And the reason it's going to continue is because there were only 800 new units built in our entire city of 1.3 million people. Only 800 new apartment units came online this year. So rents are headed up. They went from about 0.9 cents per square foot to 97 cents a square foot. So they're already going up, and I'm sure Daniel can attest over here that you know, it's a landlord's market. So this will continue. Rental houses are even a better story right now. We're up to 97% occupancy in rent houses. I had run a Craigslist ad for a rent house in Round Rock, and I had about 16 calls on that in the last 10 days. So, and it's kind of hit us pretty quick. And so what's happening is people are coming here, they're taking jobs, and they're renting houses. So rents are going up. The occupancy time is longer. So owning an investment property is awesome because the occupancy is low, so they don't have an option to go down the street to another house. The other thing, the rents are going up because that's supply and demand. The occupancy times are longer, so you don't have the turnover. That's expensive for a landlord. And you have a declining supply due to attrition. And what I mean by that is I was responsible for 450 rental home sales in the last 5 years to investors, mostly during that 2005, 2006, 2007 boom time, 450 sales. Well, at that time in 2006, for instance, Round Rock East area had 250 homes available for rent. That same Round Rock East area has less than 60 homes for rent right now. So we're seeing that, and the reason is that the supply of homes is dwindling because as these investors who bought these houses 4 or 5 years ago are selling them off for whatever reason, getting married, getting divorced, life changes, just time to move on with their investments, they're selling off their homes and these rental properties. What's happening though is because the credit standards are so tight, investors like me have a much more difficult time to buy because once you own over 4, 7, 10 properties, the lending gets very, very tight, if not available at all. So there's no new investors coming in and buying rent houses. This is going to be a trend that's going to continue. There's going to be less and less homes available and more people fighting for those homes. So it's a great time to be a landlord. What happens when the rental market gets so overheated? People then turn to what? Well, we look at house. I may as well buy, right? Why would I do this? Rents are, interest rates are at 4.5%. Values of homes are going to be starting to go up because there's a low supply of them. So let's see. I'm missing a slide here. So basically what we're seeing here on what they are going to be doing is going to buy the resale homes and new homes. When people are getting tired of paying over increased rents, it happened in 1998, 99 when they had 600 jobs a month coming here, 600 families a month coming here in the late 90s. Same thing is going to happen here, is that it's not going to be as quite a peak, and there's a lot of inventory out there, but we're going to see an increased demand for resale and new homes. I talked to Mark Minshew, and he was amazed yesterday when he ran at right now we only have 9,400 homes on the market. That's still a pretty good supply of homes for this metro, but that's down from a supply of 13,000 homes in the MLS in midsummer. There was a 9-month supply in midsummer. There's a 6-month supply now. Now that's not just because everything's sold off the shelf. It had a lot to do with the tax credit expiring and people taking their homes off the market. But the reality is we're down 28% in supply than we were just last summer. So lower supply, higher demand. Right now prices are remaining stable. Interest rates are ticking up. And I think that's driven some of the last 30 days. Our real estate, from the buzz on the street, including myself, is that real estate has been very busy. So, we've been, even after Christmas, between Christmas and New Year's, I was showing people homes. So it's getting very, very busy. And I think the interest rate kicking up, finally, they dropped it a low, 4%. And now they're at 4.625%. So when that news gets out, people say, wow, the rates are going up, it's going to cost me more, I may as well jump into the market. The strongest market, believe it or not, is between 250 and 450,000 right now. Okay, so if you're going to buy in that market, it's very strong. If you're going to sell in that market, it's very, very robust. The lower end of the market, when I did this speech last year here, was the 100 to 200,000 was the hottest segment of the market. Not so anymore. It's getting a little bit tougher on the credit standards. FHA is now up to 640 on the minimum FICO score. So the lower end is starting to see, it's still very good, but nothing like the 250 to 450 price range. Though this chart's hard to read, you can see Austin's been a nice steady growth through all this boom-bust cycles of the other areas of the nation. So we're just glad to see, and this is an interesting chart going back to 1975. The home that you see here that is now 300,000 was 50,000 in 1975. If you go to 1990, the home here in Austin that was just about 100 is about 225, 250. So, that's a great, if you think about it, I came here in 93 and I wish I didn't sell that first house that I bought here because I would have been almost nearly paid off and it would have almost doubled in value. Housing starts. Okay, let's talk about new housing right now. There in 2006, we had almost 16,000 housing starts here in the Austin area. 07, 12,000, 08, 8,000, 09, 6,000, 2010, 5,085, down 64% since the peak. That's the housing starts, new homes coming online. Okay, so the values didn't decrease, the volume decreased. Okay, don't get values and volume mixed up. So we're still at a steady market, pretty much median price stayed the same, but the amount of homes were being sold is much less. Okay, where are the hot markets? Anybody want to know where the hot market is? Where's the hot market?
I want to know where it is.
All right. There's pockets of hot markets, and one of the areas that's always done well is Terrytown. Steiner Ranch has had an incredible run over the last 6 months. An area called, in where I live out in the Lakeway area, Falcon Head West has been an incredible run up in pricing. And so, just the infill parts of the city are still really, really starting to turn around, and now you're starting to see less time on the market. Yes, sir. I'm pretty much central Texas, and that brings up another point. Killeen is one of the hottest markets. Fort Hood, Killeen area is one of the hottest markets in the United States, and the reason being is because VA financing. There's 55,000 military people that can use their base housing allowance. So if you want to know one of the hottest markets right now, and let me bring this point to you. D.R. Horton is the largest builder in Austin, and they sold somewhere, I'm guessing, somewhere around 1,800 to 2,000 homes here in Austin last year. Don't quote me on that, but that's pretty much my guesstimate. And that's from 30 subdivisions. In the Killeen area, they sold 600 homes with 6 subdivisions. So you can see that how that works. So there's some great pockets of great areas. Because that gentleman asked about real estate, give him this book. Yeah, that guy in the green. So I'm giving away my first nationally published book, you guys. So there you go. What was the question again? You said. So what it is that people are wanting to move west, but they're having to move further west, like out towards Bee Cave area, and that's where a lot of development are going. And the price is going up. Now east is why they built the whole toll roads 130, which will have so much land available forever. And that's really where they want the city to grow to. But people want to live in the west because of the schools. And because of the hill country, it's much prettier. Round Rock, Williamson County was one of the fastest growing. Williamson County was one of the fastest growing counties in the whole United States. I think it was ranked number 8 last year. So, all right, let's see. Next, one of the things that we brought up is how are you going to sell in this market? Now, first of all, you want to have professional representation. You have to look at your pricing. You have to look at your presentation from the outside of the house to the inside of the house, the staging, and promotion. And what I'm saying about that is that the internet now is the driver for housing. So if you're going to hire a professional, make sure they have an incredible internet presence. And I have right now over 4.7 million views on my YouTube channel, mostly for my houses. And then the other thing is patience. Okay, we're going to talk about Austin affordability factor. Hey, Kenn, what time you got? Okay, we have Austin in 1990 had 56% affordability factor. That means 56% of the people could afford a medium-priced home. In 2006, we had a 58% affordability factor. And in 2010, we're off the charts at 74% affordability factor. You think that all those people sitting there renting homes or renting apartments are going to say, with this affordability factor, I'm going to continue renting and throwing my money away? No, they're going to go buy. So in LA, we had a 43% affordability factor in 1990, and in 06, we only had a 2% affordability factor in Los Angeles, California. That means only 2% of the people could afford a medium-priced home. What do you think they did? They moved here. Yeah, or they went unemployed and they did a short sale. And you got 2010, that's why you have now 40% will be able to afford the medium price home. And New York's the same story. The conforming loan amount is a key number, and that's one of the reasons why the homes from $250,000 to $450,000 have been a hot spot in the market, because you can still get an interest rate between 4.5% and 5%. And right now, Kenton says it's 4.625, depending on your credit score and everything else. And that's not an APR because it would take me too long to give you all the disclaimers. All right, but we still have problems with underwriting guidelines. So FHA, Fannie Mae, and Freddie Mac's underwriting guidelines, we don't know what they're drinking from, but they're not helping us in a lot of ways in being able to get people to afford homes. And so, why would they raise the credit scores and pull more potential buyers out and not allow them to buy when they're good people at a 625 credit score? It just doesn't make sense, especially with all the availability of foreclosures and things like that. So I'm going to have Kenton come up, and this is something that we had looked at: is that where are rates going, and where are the underwriting rules headed? I have to call Kenton almost every day to find out I used to own a mortgage company. I knew the rules backward and forward. You used to have a manual that told you the underwriting guidelines. Now you got to call your banker every other day to find out what the mortgage guidelines are, because they're changing that fast. So we don't know where rates are headed. My guess is up, and we don't know where the underwriting rules are headed. And I'm going to let the expert and the fall guy when it comes to mortgages talk for about 5-10 minutes, and he can give us the heads up on that.
Thank you, Ken. My name is